Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of the ceramic products sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The ceramic products sector of Indian share market is an important part of the building materials and industrial goods ecosystem. It encompasses a wide range of products including tiles, sanitary ware, tableware, insulators, and industrial ceramics. India is one of the largest producers and exporters of ceramic tiles globally. The key growth drivers for this sector includes real estate and urbanization, rural housing push, replacement market, export growth, premiumization, and branding and retail expansion. The government supports the sector with policies like 100% FDI, which is allowed in this sector, PLI for specialty products, schemes like Amrit and Swachh Bharat, energy efficiency norms, and export incentives. The major challenges for the sector includes energy costs, raw material dependence, unorganized sector, logistics and infrastructure, and environmental regulations. So that's the summary of the sector. Now let's try to identify some trends in this sector using two graphs, yearly returns graph and the monthly returns graph. I've analyzed the share price movement of last 10 years of top 9 companies of this sector and created these graphs based on the data. I have included only top 9 and not top 10 because I did not want to include any company which is for which the market cap is less than 100 crores. The top 9 companies of the sector comprises of 2 mid cap and 7 small cap companies. Let's start with the first graph, which is the yearly returns graph. So in this graph, these green bars shows the positive yearly returns, the red bar shows the negative yearly returns, the orange line at the bottom shows the cumulative returns, the green line shows number of months with positive returns, whereas the red line shows number of months with negative returns. So in 2015, this sector gave very good returns of 42.33% with 8 positive months and 4 negative months. In 2016, the returns dropped to 20.70% with again 8 positive months and 4 negative months. But then in 2017, the sector performed extraordinarily well, in fact, the best in the last 10 years and gave returns of 93.49% with again 8 positive months and 4 negative months. But this dream run of 3 months ended in 2018, and this sector actually nosedived in 2018 with minus 50.08% returns, the worst performance by any sector in any single year that I have seen so far. In that year, the sector gave negative returns in 9 months and positive returns only in 3 months. In 2019, the situation uh, actually does not improve much, and the sector again gave negative returns. And this in that year, it gave returns of minus 16.51% with 8 negative months and 4 positive months. But after these 2 years, the sector rebounded actually in 2020 and gave very good returns of 56.17% in 2020 with 9 positive months and 3 negative months. In 2021, the situation improved further and the sector gave 61.04% returns, again with 9 positive months and 3 negative months. 2022 was equally good year with 59.02% returns, 7 negative months and 5 positive months. 2023 was again a solid year with 31.43% returns, 7 positive months and 5 negative months. But 2024 was a way below average month for this sector with only 10.67% returns and 6 positive and 6 negative months. If we see the cumulative returns and follow this orange line, we can see that in last 10 years the cumulative returns are 705.87%, which are just above 8x. So as such, not bad at all, but most of the sectors have cumulative returns of more than 8x in last 10 years. Let's see the key takeaways. First is the cumulative return. We have just seen that 605.87, which is almost equals to 8x. CAGR of 23.20%. So not a bad CAGR, just around middle of the pack. Not best, not worst. Decent CAGR of 23.20 over the last 10 years. Net negative yearly return two times. So 2018 and 2019 were the 2 years in which the sector gave net negative yearly returns. So not a bad number at all. Best year was 2017 with 93.49% returns. So clearly the best year in the last 10 years for the sector. And the worst was 2018, again clearly the worst with minus 50.08%. And as I said, this is the first sector that I have seen which has given negative 50% return in any single year. And all I am almost through with all the sectors in the entire Indian stock market. There are a couple of around 8 10 sectors which are still needs to be analyzed by me, but I'm almost through with most, and this is the worst that I can see for any sector. And positive to negative year ratio is 4 is to 1, not a bad number. So this is the yearly returns graph. Now let's move on to the monthly returns graph. So this is the monthly returns graph, and the green bars over here shows the positive mean monthly returns. The red bar shows negative mean monthly returns. The green line shows number of years with positive returns, whereas the red line shows number of years with negative returns. Let's start with January. January, the average monthly returns for January is 0.79%. So I would say a flat month for this sector with negligible returns, negligible monthly returns of average monthly returns of 0.79%, six positive years and four negative years. February, by far the worst month for this sector with minus 4.24% average monthly return over the last 10 years. Seven times this sector has given negative returns in February and gave positive returns only thrice. March 2 is a bad month for this sector with negative 1.16% average monthly returns, six negative years and four positive years. April, a strong month for this sector with 4.92% average returns, seven positive years and three negative years. May, just an average month with 1.56% average returns, five positive years and five negative years. June, a very strong month in terms of returns with 5.07% average monthly returns, but it has given positive returns only five times and negative returns in 5 years in the last 10 years in the month of June. July, average month with 1.99% average monthly returns, six positive and four negative years. August, above average month, 4.27% average returns, six positive months and four negative ones. September, quite a strong month. In fact, the strongest of all for this sector with 5.32% average monthly returns, eight positive years and two negative years. October, another good month, 3.95% average returns, five positive, five negative. November, another flat month with negligible returns of 0.30%, five positive and five negative years. And December, another strong month with 3.74% average returns, five positive and five negative years. So all in all, seems to be more of a defensive sort of sector by the look of this graph. Let's see the key takeaways. Cheaper months, February and March. So February and March, the only 2 months with monthly negative average return. Costlier months, April, June, and September. April with 4.92, June with 5.07, and September with 5.32%. And the positive to negative month ratio is 1.18 is to 1. This is not good. This means that only 1.18 positive months against each negative month in the last 10 years, that is, in the last 120 months, which is not good at all. This is amongst the worst, definitely in the worst 10 uh, ratio of any sector. So that is all from my side in this video. Thanks for watching it. If you have liked the content, click the like button, subscribe to the channel, and share this video with your family and friends. I'll be back soon with another video. Goodbye for now.